Hello Market Club members everywhere. Adam Hewison here coming to you from the digital studios of Market Club. Well, it's Friday the 4th of March. Hard to believe, but we've got some big markets. We want to show you some of the levels we're looking at that we think things are going to change. But first of all, let's take a look at gold. Gold's had a huge move. You can see we've basically gone from the lows that we're seeing here, and we've had a huge bull market. This is going all the way back to 2008. You can see we had a very big bull market going up, and then finally a turn, and then we came down from the highs that we're seeing here. This came in around 2011 in August, and we had a very strong bear market. Now, I just did a report on Wednesday. You can check it out, go back, take a look at it, and that's on gold. And we thought that the formation that gold was forming, I'll get a little further out, give you an idea of what we're looking at, and that is, it was a formation we've seen before, many times before, and it's usually very successful in terms of being complete. So here's the move up, and then if you remember, you look at the chart we showed you on Wednesday, we're looking for a breakout apex of this triangle, and boom, we've got it. So we're looking now for this market to move up to about the 1300 level before it runs into any resistance. We expect that level to be hit maybe on Tuesday. So this is an excellent candidate for a 52-week high on our Friday rule. We expect it to be higher, as I said, on Monday and Tuesday, so watch that very carefully. Currently you're trading at $1,274 an ounce, and just remember, a short time ago we were actually $200 lower, actually $220 lower, so watch that very carefully. We've given you some bigger pictures, numbers on the longer term charts, and that looks like we could see gold going up to possibly the 1587 level on the Fibonacci retracement. So let's watch how that plays out. Let's take a look at crude oil. Crude oil is really interesting because we've had the first signal we've had in quite some time. The last signal we had in crude oil was all the way back. I'll get this closer in for you. So let's do a 1-year chart. Actually, probably a 6-month chart that'll do it. But you see, there's the last signal we had, 47.34 signal, a negative signal. Look at how the market just came down, lowers just around the $28 level, and we finally did see something that we like technically, and that is the double bottom that we're seeing right here. You see here, and a pivot point. Now the key thing is here is if we see this market go over this pivot point, we're getting very close to that level now, then it will project this market up to the $38 to $40 level, which I think the market will find resistance right around here. And psychologically, $40 is a big number to go through, particularly given the fact that this market's been under so much pressure for so long. But things do change. You can see how we just sort of moved around, and we're headed higher. So let's see what happens. Okay, take a look at the Dow. You can see the monthly is still down, indicating the longer term trend is still down. And if you look at this market, we've had some interesting Fibonacci retracement levels go from the highs here all the way down. You can see we're getting into that area where the market's going to have problems, and I think that's the important thing to remember right now. And I think if you look at the Dow, you can see these previous lows, I think, also going to be effective on the market. So we're looking at the 17,013 level as being 17,072 as being an area that the market's going to have a problem. So watch that very carefully. Look for a reversal back down next week, and I think this is about running sorts. But there's the double bottom. There's the pivot point, much like the other markets we talked about, and we've seen the move, so it's going to be over in our opinion. I think we'll see something like this, and then we'll just see it roll over. If you look at the bigger picture, and this is the big thing to look at in our opinion, and that is, let's just go to max. Take these off here, and you can just see how this market made its low in the first quarter right here. And then from there on it's just been basically up, and then finally it's rolling over. Remember, all the hedge funds had terrible years last year because they didn't have this bull market pushing them. And I think once we go through this area right around here, we're going to see this market under a lot of pressure. And I would say that's around 15,500, 16,000 again. I think that's going to be an area that we want to watch very carefully. But I think later on in the year we'll see this market lower. Looking at the NASDAQ, same pattern there. You made the lows back here, and then you've had a pretty nice run of it in terms of on the upside for the next several years, actually about 6 years. And I said bull markets don't last forever, and this rolling over is something to behold. And I think if we see the markets go through these lows again, we'll have some problems on the downside. But let's take a closer look at the NASDAQ. So you can see we're getting into that zone right now in the 61.8% zone at 4,824. I think that would be a reasonable level to look at. Certainly the 4,000 810 level is an area I think you want to be looking to short this market. So let's see how that plays out. But again, we still have our trade triangles in place. The long-term monthly is still negative on this index. This is the S&P 500. Again, the similar scenario there where you're seeing a move into levels that should offer resistance. And I think we're looking at the certainly the 2003, 2004 level, and we're certainly there right now. I think next week is an area to be looking to go short this market. So let's see how that plays out. But again, double bottom, pivot point, we're getting there. Make it a little further, but we're getting right into the zone right here, these previous lows that are going to cause a problem. I'll be back on Monday. Have a great weekend, everyone. Thanks for watching.